I'm happy to show you what we have today. I'm going to show you how are we going to prepare publish financial statement. Here, first of all, we are going to have it's like a board game, but actually this is consists of report that we have. Here is the first one is a statement of profit or loss and other comprehensive income. We started with a few items to show the gross profit, and then we have to show the profit from operation. We also show the profit after tax and the other comprehensive income. This actually is a report in the one of the published financial statement, right? Next, we also have the statement of changes in equity. Statement of changes in equity to show the changes from the opening balance until the closing balance of the equity, which is the mandatory item must be ordinary share and retained profit. We also have some other reserve and the share capital, right? And then beside that, we also have here is the notes for the PPE, the tangible property, plant and equipment, which also have to be shown in terms of opening balance at the cost of valuation, closing balance. Then because this is a physical or tangible asset, it must be subject to depreciation, so we have to show also the accumulated depreciation, opening balance, the depreciation charge for the year, end of the day, the closing balance minus the closing balance of the accumulated, we are going to get carrying value. Alright, so once we're done all these notes, we are going to come to the end of the financial report, which we call the statement of financial position, which actually consists of non-current asset, the current assets, and all these assets is financed by the equity, non-current liability, and liability. Alright, so this is actually a simple lump sum of the report that normally prepare in the financial statement. Right. Okay, next, first of all, what should we do? In the final exam, you must remember which item or what report consists of each item. Right? So first of all, here what we have is the item that normally we have to be in the report, right? So let's say we have property, plant, equipment, right? So property, plant, equipment actually is a tangible asset, lump sum figure, so we have to show in the financial positions, right? So we have current asset here. It is the color of yellow because we're using color coding for the debit and credit. So the yellow is a debit and the pink is a credit, right? So you have current liability here at the back there. We have non-current liability here. We have share capital, part of the equity. Alright, we have a motor vehicle should be included in the financials, the notes of the PPE. We have cost of building here. We have freehold land, which is debit because of asset. We have interim dividend should be included in the statement of changes. So the deduction of your retained profit. We have profit from operation, right? And we have profit after tax here, and then we have other comprehensive income here, and then we have ordinary share capital, actually part of statement of changes in equity, and then we have ARR, yeah, part of your reserve, and then your retained profit and your gross profit. So this is actually the cost that we have to fulfill, and then we remember which element should go to each report, right? So next what we have is another element or another item that should be included also, right? So here we have intangible asset. Intangible is part of the non-current asset. This is tangible, this is intangible. We have investment, right? We have trade receivable, part of current asset. We have prepayment, part of the current asset. We have cash at bank, part of current asset. We have inventory, part of current asset. We have equity, part of the finance by item. We have reserve, it's a lump sum figure for the financial position, and then 10% debentures, part of non-current liability. Tax payable, actually your current liability. Trade payable, your current liability. Your 10% preference share, part of your share capital. You have accrual, part of your current liability, and you have your final dividend of a dividend payable for your current liability, right? We have alright, so we have cost of sale. Cost of sale is actually in your profit or loss item. You have other income, you have selling and distribution, must be debit, reduction of your retained profit, and this is your administrative expenses. You have finance cost. We have taxation. So taxation is the item expense for the year. This is profit before tax, and you have investment income, right? Okay, here actually where we should have some few all the complete item that should be in each report, right? So next what we should do is we are going to have the trial balance actually in the exam for the publish account, they are going to provide you publish financial trial balance. So you are going to use the trial balance item to fulfill all the templates that we already have here. Okay, the first one we have interim dividends. This is debit, yellow because it's reduce your retained profit. So we go here, reduce your retained profit under retained profit column under statement of change in equity. This is cumulated depreciation. Cumulated depreciation, it will be here. If it is for motor vehicle, put it here. And then you have accumulated depreciation for the building, right? Under the building column, you have intangible asset item for 300,000. Then you have your investment 300,000 under non-current asset. You have 10% debenture, your non-current liability. You have trade receivable, right? So trade receivable will be your current asset. Inventory, this is closing stock, you 800,000 current asset. Your cash at bank 2,230,000. Yeah, this is your current asset. Then you have your trade payable, your current liability. Then you have your motor vehicle should be under notes for your PPE. How much total is 2.2 million, and you have 40 million of building. Seal 6 million profit also loss. So the item should be at the top, and then you have your dividend income as investment income here, and then you have debenture interest as your finance cost. Alright, and then you have your rental income as your other income, and then you have distribution costs, right? Then you have administrative costs, expenses, advertising, part of it, selling, distribution expenses, your tax paid, part of your taxation expense, and your preference share in your statement of changes in equity, and then you have your ordinary share for 8 million and statement of changes in equity. Then you have retained profit opening balance and the statement of changes in equity. Normally, you are going to settle that trial balance item, put it in the template that already prepared, and then so the next thing what you should do is very simple. You are going to do the adjustment. The adjustment actually the additional information that some recording haven't made yet, so it's not in trial balance. So you have to do the double entry every expense, every transaction. So first we have here is a prepaid advertising expenses 40,000, showing that there's expenses, there's some prepaid. So prepaid, this is debit, so actually prepaid is your current asset. So this is debit. So once you debit, you must credit, right? So you have to find the credit card, right? So the credit card will be the credit one. So the credit is you reduce your advertising expenses. Okay, advertising is under the selling and distribution. Alright, so you have your accrued staff salary. This is your accrued expenses. So accrued, actually you have to debit your expenses, increase back your expenses. Then you have to credit your accrual or your current liability. So your accrual will be goes here under accrual. Yeah, so debit, credit, right? So next what you have is a bad debt. Tax expense for the year is for 140,000. Yeah? So this is tax you already paid. This is the total final tax that should be paid. So you're going to charge this one as your final taxation. Just one entry for the first time, right? And then you have your bad debt 30,000. So bad debt actually is writing off your trade receivable. So you have to reduce the trade receivable. So credit receivable. So you have to debit one. So that's going to be your expenses as your bad debt. So if this expenses, put it under administrative expenses. Okay, and then what you have next is a director declare second half year dividend. So if they declare, you have to debit and you have to credit. Yeah, so here you have to debit for dividend, you have to debit the retained profit again, right? And then you have to credit because it's declared, it's an obligation of the company to pay, so it become your current liability. Alright, so the same thing goes to the director. If director also declare the final dividend for the ordinary shareholder, so here this is also become the liability of the company. So put it under dividend payable. Then you have to your debit will be your current, your retained profit, yeah, reduction of your retained profit, yeah. And then you have your let's say you have director revalue the land to become final figure 5 million. So put it under your PPE, put it the last item. This is your 5 million final figure for your land. And then you are going to have your depreciation for the motor vehicle, for example here. So here depreciation actually is 100,000 for the year. So you have your debit and credit entry have to be made. So the credit should be under accumulated depreciation for the motor vehicle, and the credit is become your expenses under selling and distribution, because it's stated clear it should be charged under selling and distribution expenses. And then we also have depreciation for the building. And depreciation for the building actually is a 10%. There's no calculation because the calculation will be made later. Alright, so here the debit will become your expenses for the year under administrative expenses, and then you credit your accumulated depreciation for the year. Alright.